Going on to China here. Alibaba's cloud computing services subsidiary entered into a pact to collaborate with state-run data exchange in Shenzhen, China's southern tech hub, in a move that is expected to bolster how companies buy and sell data in line with the country's digital economy plans. This is a nod from the government working with the state-owned enterprise that Alibaba is now okay, and this is a big thing that was overlooked in the media. But the climate has completely changed, and we're going to talk through some more data besides this this deal that they did with the state-owned enterprise. Also, China just scrapped PCR tests for inbound travelers and latest easing. Here's an article, Nothing Would Say Forgiveness Like an Ant Group IPO. And this talks about kind of the IPO track moving forward. And it also breaks down the now 6 parts of Alibaba business. So Taobao and Tmall is 29% of the business. Global digital commerce is 8%. Local services 8%. Logistics 7%. Cloud 14%. Digital media and entertainment 7%. And cash is 26%. So, I thought it was telling that a piece of their business which investors really assign no value to, for Shippo, which could be the next Costco of China, the supermarket business with membership fee, is IPOing for $10 billion. The logistics business is supposedly IPOing for $20 billion. Ant Financial will IPO. Usually it's 12 months after a change of control, which happened with Jack Ma, I think late last year or early this year. So that could be within 12 months. So all of this value is going to get unlocked. But the key is the underlying business. And the point that I make is often that people have been extrapolating the flat performance of the last 2 years while the country was locked down out into the future in perpetuity. And the play is a reversion to pre-trend, once in a 100-year event. And I actually think with the pent-up demand, with the stimulus, with everything else happening, and now the government's interest, just as they were interested before the election or the appointment to slow them down, now they're incentivized to speed them up after the riots. And the protests rather. So a couple of things that I want to point to in Q1, because they report in a handful of weeks. I couldn't find an English version of this article, but my Chinese friend sent it to me, saying that VIP shops saw clothing segment sales increase by 40% year on year during the March 8th festival in China. That's Q1. Alibaba's gross merchandise value is 53% clothing. So this is a big deal, the read through from VIP Shop up 40% year on year, with Baba's GMV being 53% clothing. You can also go to VIP Shop's annual report to see how much their GMV shrunk over the last couple of years as they were clothing heavy. So we're going to see that was already priced in. No one's expecting upside, and it's such a huge percentage of their business that very little growth value is assigned to their e-commerce, and I think that it could just be getting started, and no one is positioned for that. So pretty exciting on that front. The other thing is Pinduoduo is mainly agriculture products, JD is electronics, and Taobao Tmall is for clothing. If you ask any average Chinese consumers, they will tell you this. So when people think about clothing, they think about Alibaba, Taobao, and Tmall. 53% of that is clothing, and that went through the roof. Why? Because when you're locked in your apartment, literally and figuratively, you don't need clothes. It's when you start going out. So all the pent-up demand for 3 years we're going to see in Q1's reports, which is 50% of their e-commerce business, and Q2 and Q3 and Q4 moving forward. It's going to be a new regime of unexpected growth, and that's the look through from this. Now, we still need the Fed to back off. We still need the dollar to go down. We still need all that. But the good news is we won't lose, once all those things fall into place, we won't lose the benefit of the underlying business having improved before conditions were right for the stock to improve. So we'll get it all retroactively at the same time. And it's kind of like building a house, okay? For months and months and months, you see nothing, but under the surface, they're building the foundation. But from street view, it looks like they've made absolutely no progress. And then, so that could go on for 12 months. It could go on for 18 months as they build the foundation. They put in, the boiler, the heater, all that stuff. And then a week later, there was nothing there. And all of a sudden, 2 stories are up, because once the foundation is laid, the thing can rise overnight. And that's why we're talking 160, 180 for that initial move, fill the gap, and the other factors that we talked about of recent weeks. I think it's going to be quick. When it goes, it's going to go fast, and it's not going to let anyone in. So next thing is okay. So one thing no one else seems to talk about is gross merchandise value makeup between Baba, JD, Pinduoduo. Over 50% of Baba's GMV is clothing and beauty products. And you remember last week we covered the retail sales crushed expectations, GDP crushed expectations, and a huge percentage of that was cosmetics. So not only are they going to hit it on the cylinder of 53% being apparel, they're also going to hit it on cosmetics, because when people go out, they want to look good. So that's why you saw some strength in PDD, Pinduoduo relative to Baba. That equation is going to change very quickly. However, the newest Q1 data, 2023, is showing 17% year-on-year growth for clothing. Vipshop, another clothing heavy e-commerce competitor, reported seeing as high as 40% year-on-year growth in their women clothing sales this year. People saw the Baba numbers going down and modeled out to the future as if it's stagnant. But if you look deeper as to what is driving the growth, you'll see much better into the future. If we see Q1 Baba China commerce grows 10% year on year, what do you think the market will do? The average of, the King's return. So Taobao daily active users overtakes Pinduoduo. This is from yesterday. According to late financial reports, third-party data shows that in March this year, an average of 377.9 million people used their mobile phones to browse Taobao every day. 26.3 million more than those who use Pinduoduo. Remember, Pinduoduo was the agriculture. They did better during the lockdown. Now the game's back on, and Alibaba is back in pole position. This is the first time since February 2022 that Taobao's monthly average daily active users have surpassed Pinduoduo. Again, regime change. Data also shows Pinduoduo's DAU fell 9% month on month, while Taobao's rose by 2.4% month on month, et cetera, et cetera, et cetera. So you can go through that on your own. And then finally, this data here is from Heel and Home, just reported their Q1 earnings yesterday. They are the largest enterprise among the garment sector in China. Screenshot shows the online sales grew 17.7% from 537 million to 632 million in Q1 2023. Last year, this number was down 6.5% Q1. So there you go. This is all pointing to great things for Q1 for Alibaba, Taobao, Tmall, and that's before you even get into the other businesses. So we're pretty excited to see that.